In this presentation, we will create an invoice after having created a purchase order and entered the related bill. In other words, we have already had the purchase order requesting inventory, have then received that inventory, created the bill for it. Now we're going to be following that inventory through the process to the sales side of things, where we will be making an invoice with it. Let's engage with Sage 50 Cloud Accounting. Here we are in our Get Great Guitars practice file. We're currently in the customer and sales section. We're going to jump on over to the vendor and purchases section, just kind of track the inventory as it's going through the process. Obviously, the inventory both goes through the vendor and purchasing cycle, and then it goes through the sales cycle. So we have the purchase order. In this case, if I select the purchase order dropdown, we want to view and edit the purchase orders. Just to take a look at the purchase order, and I'm going to maximize this screen. It's going to be the Epiphone. So Epiphone is the one we're following through right here. If I double click on it, then we see the purchase order for it. The purchase price being the $400 for the Epiphone Les Paul, the ELP. Closing this back out, Then we had a payment for it. We followed that through with a bill for the Epiphone. So the purchase order then ties out to the bill that was created. Let me close that back out and open up the view and edit the bills so we can see the actual activity of the ones that we have already created. So here's the one for Epiphone. If I double click on that item for Epiphone, then there is the bill. So now when the bill happens, that's when we actually have the invoice, and that goes on the books now as inventory, and the other side increasing the accounts payable. We now have it, and we can pay it then, but we're going to go now to the fact that we have the inventory and we're going to sell it, jumping over to the sales side of things, going up to the customer and sales. Now we're going to create an invoice following that piece of inventory through. So we're going to go to the sales invoice, new sales invoice. So we're going to create a new sales invoice up top. And the invoice is going to be for Eric Music, which I'm not sure we have yet. So let's just double check here. No, so I'm going to say new. I'm going to make a new customer here. It's just going to be called Eric Music. So here we have it. We'll type in here ERIC Music. And then I'm just going to copy that. I'm going to copy that tab. We'll put that in the name as well. And that's it. That's going to be the minimum we need in order to populate this information. If this was an actual customer, then we might want the contact information so that we can call them, put them on the mailing list, and all that kind of thing. But we're going to save this for now. So we'll save this, and then I'll close this back out. And so then let's select Eric Music up top. We're going to be picking up Eric Music, the new customer we just set up here. There we have it, tabbing through. And we're going to pick up the date then. The date we want is going to be 012520. And that's the due date is going to be a month later due to our terms. So that looks good. And then the quantity we're going to have is 1. The item is going to be that ELP that we purchased. We have 2 of them now. That's one of our bigger selling guitars actually. And then there's going to be our ELP. And notice it's on the books now for 500. Not the 400, because this is the sales price. So we're following that piece of inventory through. When we purchased it, it put the documents created, including the purchase order and then the bill for it, was for $400, the amount we purchased it for, it being driven by this inventory item. Now we're going to sell it for the retail price, which is the amount that, again, is driven by this item. We're going to include the sales tax for it. So I'm going to say we're going to have the sales tax here. And there we have it, the $47.50. All right, so what's this going to do? It's going to be our invoice again. It's going to be increasing the accounts receivable because it is an invoice by that $547.50. The other side's going to go to sales, but only for the $500, the amount we get to keep. The different sales tax, it's going to be increasing the sales tax payable. It's going to be a payable account that will be increasing. Also, inventory will be going down by an amount not on this form, but one we saw on the prior forms, that being $400. And then the cost of goods sold, the expense related to us giving up the inventory in order to generate this revenue will go up, that being the 500. The effect on net income then, 500 sales minus cost of goods sold, 100 or 400 being a net income or net increase of the $100. Let's check it out. I'm going to say save, and we'll check it out this time. I'm going to say, actually we might want an invoice number. You're about to save. I'm going to say no. I'm just going to put a number here just to make sure we have everything populated. Then I'm going to save that. And then let's say okay. Let's go on up to the trial balance this time, since we've seen this report, or we've seen this form before. So let's analyze it with the trial balance, which will be a little bit faster considering the fact that both the balance sheet and income statement accounts are affected and will be seen on the trial balance. So we're going to go down to the working trial balance in the general ledger. We're in the general ledger section. We're going to go down to the working trial balance. So let's open up that working trial balance. Then we'll go up to the options up top. We'll do a few adjustments in the options up top, including we're going to change the dates. Let's make the date to a specific day, and let's make it to the end of January. So end of January, and then I'm going to remove the 0 account. So I'm going to include accounts with 0, no, uncheck that, and that'll take away the accounts with 0. So I'm going to say OK, and there's going to be our information. So accounts receivable should be going up. So if I double click with the zoom in on accounts receivable for the invoice that we have then just created for Eric Music, there's the $547.50. That should be the full amount, including the sales tax bottom line number of the invoice. Closing this back out. Closing this back out. The other side is going to be on the income statement, which is on the bottom of the trial balance, which is in order: assets, liability, equity, income, and expense. Down in the income statement, if we double click on the sales income, we should see then once again Eric Music. This time only the sales price, not including the sales tax. The sales tax, that it's going to be a payable account. Closing that back out. It's going to be up top in the liabilities section. So we've got the liabilities down here, sales tax payable. There's the sales tax payable amount. That's where the difference is going. That's where the sales tax of the $47.50 is. Closing that back out, we also know that the inventory is going down. So here's the inventory. It's going to go down by that $400, the amount that we purchased the inventory for. And so if we go into that, we have the $400. There's the $400. That amount not actually on the invoice, but it knows about it. Well, I'm going to close this back out. I think I picked up the wrong form. Here, it should be going down. That's going to be this one. So here's the credit. So it's going to be going down, and there it is. So it's again, the dates are a little bit out of order there. Pardon me for that, but here we have it. This is going to be the invoice, and again, that $400 not actually on the invoice, but it's being decreased. You can see, of course, that's going to be the purchase price for it, as we saw in the purchasing document. Closing this back out. Closing this back out. The other side, then it's going to be on the cost of goods sold. So if we go on down to the cost of goods sold, and there's that $400 there in the cost of the goods sold as well. Net effect on the income statement then, closing this back out, it's going to be that 500 increase minus the 400 increase in cost of goods sold, or 100 increase on the net income. That's going to be it for now. Let's get out of here.